What's up, everyone? Welcome to another episode of Real Estate Wholesale Analysis. If you're new here, welcome. This is a daily series that we have going on every Monday, Wednesday, and Friday at 6 p.m. Pacific Standard Time. Occasionally, there might be some times they have to get canceled, so just keep it up at all times via the meetup of any updates. Um, Also, part of this process of a real estate wholesale analysis, if you don't have any experience, that's perfectly fine. If you have like 20 plus years of experience of real estate or real estate wholesaling, that's definitely great. This is open to all experiences. We're here to learn and just help each other out in terms of analyzing some deals. If you happen to have an address, if you want to get analyzed, drop it on the chat and just provide any details that you have for that specific property. We're going to be using one of the like calculators to expedite like the process of real estate analysis, and we're going to be walking through some basic information on real estate overall and how to like break down like a deal, what makes a deal work out, and we are going to be using some live examples as well too. Um, and a little bit background, a little about me. My name is Elton, like Elton John. I don't do any singing, but I do work in some real estate, and I have over a decade of experience in sales. Um, and my major is aerospace engineering, so numbers and real estate really comes out really easy for me. I don't expect that to be the case for everybody, but if you can add, subtract, divide, multiply, it's you can definitely do this job. And it literally this not job, this business, it's literally about communicating and building relationships. So even if you're an introvert, by all means, you can definitely just get out there. It just takes a couple of times for you to get comfortable, just like how in the beginning of your career or your job when you first started it, it took a little bit for you to pick up on it. It's the same thing. It just takes repetition, 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 for it to pick up. But what during my journey, it's the part of the struggle I had as well too, and I'm sure some of you might have it or don't have it, but I will experience it. Again, depending on where you are in your journey, is part of the process is when it comes to like analyzing deals, you trying to determine like, hey, is this a deal? If it's a deal, how much should I get on the contract for? If I happen to get on the contract, how much should I sign it for? How can I find people? So there's a lot of questions in terms of it. I'll answer some of them. I'm not going to be going through the entire process of real estate wholesaling. I'm basically going through the entire process of just real estate and analyzing section. And part of that analyzing section, because again, when it comes to real estate wholesaling, there are a numerous amount of steps that need to be taken. Our main one that we're going to be focusing is estimating like repairs and what kind of offer, where should your offer be standing based on those repairs as well too. And then everything else, it's again, if you're looking for more one-on-one or get it and breakdown through somebody to walk you through all the steps, you can definitely book a one-on-one on my website, eltonvargas.com. And you can do a one-on-one if you have like something specific you want to niche down to. That's perfectly fine as well too. But wherever it is that you need help with, again, I do have those one-on-ones if you ever want to set it up. But other than that, I just want to start diving into it, because we always go beyond like an hour time frame, which is perfectly fine. If this is definitely very helpful for you, it does get recorded, and then the recordings are available on my real estate education site on my website as well too. All previous ones are in there as well too, so that way if you want to go check on all the different deals that we have on different markets, that's where we go. We don't just snitch down to one specific market. I like to analyze deals from other markets, just so I can understand like what's actually happening out there besides like the markets that I do as well too. If you have any questions, write down your questions like on a piece of paper, or you can drop them in the chat as well too as we go through it. I'll answer along the way, but I do leave it open for some Q&A at the end of the event, so that way if there's a bulk of questions that you have, drop them on during that Q&A time as well too. So if you're ready with me and ready to dive deep into this, let's get started. So part of real estate overall, the very first foundation that we have to understand is ARV, or after repair value. And what that basically is how much the property can be sell after it gets fully updated if it needs some type of work. It could be something as very light in terms of like a quick paint or just carpet change or some flooring or something very minimal that the property needs. Usually you're gonna come across a lot of these on well-maintained properties or newer properties as well too. Newer properties, I mean like 2010 and higher builds. And then additionally too, in terms of properties that are being rented out. So properties that are rented out usually get maintained because tenants move in and out, so they're always getting updated either on a yearly basis because 12-month leases, or maybe less time from leases as well too. But those are the type of two are going to be more like on the light repairs side, but we'll get more into repairs. But ARV basically it just again what the property will be worth, because not all properties are going to be either a fix and flip. Some of them are going to be buying and holding type of strategies as well too. And then there's also going to be some type of creative deal as well too, which will hence lead either to a rental side as well too. So fix and flip or buy and hold are going to be like the main strategies. If you're buying and holding, then you can expedite your strategy to like Airbnb, student housing, whatever it is, it's buying and holding. So those are going to be the two main ones. But the thing about ARV is all investors, all buyers need that what their repair value or what the property will be worth once it gets fully updated. And then of course the rest of their formula, because they're all gonna have different formulas across the board. That's the thing that you do have to find out about your buyers on how do they calculate how or where the offer comes in. Besides just finding out the formulas, it's also good to understand how active your buyers are, what kind of properties they're looking for, of course, the price point as well too. Basically, you want to understand their buy box on what kind of properties they're looking. So that way, in the future, when you come across a property that fits that buyer, you can text them right away, let them know what kind of profit they'll be making, what kind of strategies, what kind of repairs. You want to lay down everything to them. If it happens to be like a fix and flip deal, if it's a rental, then you just gotta add like what the potential rental market is. Is it going to be there? But understand that after ARV, the formulas are going to be very differently across the board. Investor one and two are going to be the most common ones that you're gonna see. Occasionally, you're gonna come across an investor that does things way different than anybody else. But again, they found their formula along the way doing a lot of experiments and a lot of projects in real estate. So they came up with like their own formula. So it's always good to understand how buyers buy. Um, but the very first foundation is understanding ARV. And the way we're going to calculate ARV, besides the repairs, is going to go through like the neighborhoods, which we'll touch up and basis on that in a bit. Next is going to be repairs. Again, I was mentioning repairs. Repairs are good in terms of like light repairs. They're going to be more on properties that are in the rental side, properties that are newer, where they're constantly getting maintained. But these type of properties that need light repairs are going to be pricing between $10 to $20 per square foot. There are states that the price per square foot prices and repairs is going to be very differently. States like California, Florida, Texas, New York, Massachusetts, Washington, these things are going to be a little bit more expensive. So it's good to like either you can get in touch with like some general contractors, you can get in touch with some other fix and flippers as well too. There's some real estate agents that are investors as well too. So you can always try to like shadow somebody or just ask questions, or if you want to dive into it, so you can understand like the details on repairs and approximately how much things are going to be. It's just always good to like touch with somebody who has been on that side of things, so that way you're able to like ask him and then get like an understanding on what the repairs are on that specific market that you're looking into. Next, we have average repairs. Average repairs are going to be price points between $25 to $40 per square foot. These are average price per square foot. I don't like to dwell too much on these repairs because whenever I bring a project to an investor, the investor can spend either more or they can spend less on the project themselves, depending on the materials and what it is that they want to use, and the labor is going to cost a little bit more as well too. Or if they want to take the inexpensive route, then they're able to lower down like their expenses, or maybe they already have a general contractor that they've done either general or a niche specific contractor that they or contractors, I should say, because there's going to be different contractors for different projects of the home. That is, it lowers down like the costs as well too. But these average repairs, these are going to be a little bit more than the light repairs. These are going to take more in terms of like the main areas like the floors, kitchen, doors, windows, bathrooms, and of course it's going to be the major project of it all is the paint, doing like a full updated work on the home. And then occasionally you're going to have like extra things like furnace, HVAC, maybe the roof, maybe some extra details like gardening as well too. So it really depends. But now we're starting to get to a little bit more in terms of like the project. Now, the next one in terms of like type of repairs is called gut job repairs. And gut job repairs is basically stripping down the entire property. So I'm not sure if you ever seen like our home getting built up where you see like the framing of the home. There's no walls, nothing. You can see through the entire house. It's not that we're gonna do that to like to the home, but occasionally you might have to. These gut job repairs is basically doing the entire home in terms of like inside, and then sometimes some of these homes that are gut job repairs might have like a hole in the roof, so you probably gonna have to come across doing something extras as well too. And occasionally you're probably gonna have to check on like on the foundation, some external, some internal stuff like plumbing as well too. So now you got to get more expensive like in the project. But again, the prices, I like to stick to these average prices of $45 to $60 per square foot because again, if I bring a project to an investor, they can spend more, they can spend less. And especially with these gut job repairs, sometimes they can demolish the entire home and just start all over again. And also depending on the home, if it's like a big lot type of home, and depending on the zoning is very important for you to find out as well too when looking at properties. Because let's say, for example, and you come across a property where the property has like a big amount of land, and then inside the land, the property is actually classified it's different per state, but let's say if it's classified as a R1, it basically means it could be a residential or a multifamily type of property. So now your investor, it's up to them if they're willing to do it, is they can start building townhomes because they're able to build multiple families in that lot. I see a lot of these in a lot of Midwest states. So that's why I share with you that I've come across scenarios like that. So understand like the zoning, which we'll go through where to find like the zoning on some of these deals. As well too, if we happen to come across a property that it's like, oh, this is an example of it. Because other than that, it's going to take a little bit more research on finding out that zoning section. But it's especially if you're working with agents or sellers, get them to like tell you a little bit about the neighborhood, and then asking like, hey, are there any multifamily homes nearby by any chance? And they're gonna be able to tell it's either a home has like two mailboxes in that lot. That's a multifamily home. Another one, how are you gonna be able to tell? It's there. You can see two different numbers. If there's no mailbox in the front, you can tell by the numbers on the property, or we'll say letters. Um, 1841A, 1841B, 1841C. So those are examples of like multifamilies that you'd come across as well too. Part of it, the next step is going back to the ARV on how you're going to be able to find some of these properties, and finding out what the ARV is going through a process which is called comping. And what comping does is basically lets you, you have to do the research yourself on looking for similar properties or comparables that are similar to your subject property. That way you're able to find out like what kind of what's the market looking like in that specific area. And when we're looking at those similar properties, you want to stick within certain parameters. as well too when looking for similar homes, because what these parameters are based on is an appraiser. So when a property it gets fully flipped and if it gets fully remodeled and now it's time to like put it on the market to sell back again, then an appraiser is going to be looking at what other properties once it gets fully updated, there's going to be an appraiser that's going to come in and they're going to let the investor know your property now is worth, it used to be worth this much. Now, because you fixed it, it's worth X amount. And what that appraiser does is he's looking or she's looking for similar properties in the area that have been fully updated. So that way they're able to determine like the value, the new value of the property with all the new materials and the labor that was done to like the property. So these are the parameters that you should be sticking with. So first things first is the square footage. When looking for comps or comparables, you want to look for properties that are plus or minus 300 on the square footage. Looking into the lot size, this is going to be varied on properties that are more in terms of like acres. So if you have a property that's a quarter of an acre, half an acre, 1, 2, 3, 4 acres or more, you want to start comparing lot size as well too. Occasionally you definitely have to pay attention to that as well too. It's going to be on the description where whatever platform you're using, Zillow, PropWire, PropStream, realtor.com, Redfin, whatever resource that you're using to like look at your real estate properties is always going to let you know the lot square footage, because sometimes you might come across a property that is they're similar, identical, but one has a 4,000 square foot lot and the other one has a quarter of an acre lot. Because again, it just depends on where the property is located. Even if they're in the same neighborhood, it's just how much of the land is being owned as well too. Looking for similar properties in the area, you want to stick within a half mile to 1 mile radius. You can go a little bit more as well too, like a mile and a half, maybe 2 miles as well too. But part of this a radius, what contradicts it, it's making sure that you're not crossing any major roads, or what I like to call double yellow line roads. And what a double yellow line roads looks like is going to be basically broken down like this, where there's going to be high traffic in terms of like commuters, people are getting to and from work. There's going to be buses, there's going to be delivery trucks, there's going to be construction trucks. So it's just a constant flow of traffic happening on these major roads, which every single example always is going to have a major road, because what these major roads do is basically they kind of organize a quadrant for that specific neighborhood. And what one side of the neighborhood one side of the road is going to be one quadrant or one neighborhood, and then the other side of the road is going to be a whole different quadrant in a whole different neighborhood as well too. So no matter how similar the comps are from on those two sides of like of the road, if you have like a property on one side and you're pulling a comp from the other side because it's very identical, you're not going to be able to pull that comp whatsoever because of that restriction as well too, because you're crossing that major traffic road from there. So it's just think about those major roads to being kind of like the blocking, or where the neighborhood ends, and anything beyond that, it's a whole different neighborhood as well too. Next is looking at the years. Make sure you're comparing apples to apples. What I mean by this is compare a 1965 home between plus or minus 10 years. Don't pull a brand new construction home 2024 built, because the materials and everything is going to be very, very different across the board from there. So stick to the same years, or again, plus or minus 10 years. And when we're looking for comps, and I definitely want you to write this one down because this is like a big one, is when you're looking for comps, you want to find 3 comps. But the best way to find comps is to look at the past, at the present, and the future. And what I mean by past, present, and future is I want you to look for properties that have sold in the past, that sold in the last 6 to 9 months. I want you to look at in the present is properties that are currently under contract right now, today, or they're pending still. Those are properties that are in the present time frame. And then properties that are for the future, these are going to be properties that are going to be that are still on the market, and they're potentially going to be selling at X amount of dollars. So when I ask you for when you should be looking for 3 comps, those are your 3 ones right there. If you don't see a lot of them in the past, then you're probably going to see a lot of them in the present where they're going to be under contract. And if you don't see a lot in the past and there's not a lot in the present either, there's mainly a lot of them right now that are going to be selling in the future, then that tells you that that market, there's not a lot of activity happening, and probably a lot of those homes are sitting on the market, or they're just going to be hard to like sell, maybe because they're overpriced, or maybe there's just not a lot of buyers activity happening in that area whatsoever. So hopefully you're able to write some of that stuff down. If you didn't, again, this gets recorded so that way you can rewatch it as well too. Uh, Part of the process that we're going to be doing, we are going to be going through an investor's strategies and also like a full breakdown. So let me bring that over so that way you guys can understand what a wholesale would look like in terms of this. Again, if you have any questions, by all means, you can drop it in the chat and I'll answer like along the way, or if not, you can reserve for like afterwards. And another thing that we're going to be using is I'm going to be using some of my calculators that I've designed along the way of my journey, where it's a pro bundle. You're going to have access to like a fix and flip calculator or the ARV calculator. There's a rental calculator. There's a creative finance one coming soon. And then you're also going to have access to a real estate CRM where you can keep a track of like all your properties, do some market research as well too. So if you want to get access to that, there's going to be on this website, eltonvargas.com/calculators. But first things first, before we jump into like analyzing deals, let's go through like a breakdown on what a deal would look like if we happen to come across like a deal for tonight. So let's see. So let me pull this investors one really quick. Let me expand it. Okay, let me reshare this real quick. All right. Where to go? Where to go? All right, cool. All right, and let me go back to sharing my screen. Here we go, desktop number 2. All right, cool. So here's an example of what a strategy is. It's the most common strategy you're probably gonna hear during your journey. It's only going to be the left side of sorry, the left side. It is going to be the most common strategy of our that you're going to be hearing from investors, which is called the 70% rule. And what basically the 7% rule is when investors are willing to buy the property at 70% of how much the property can sell for, or AKA the ARV. So let's break it down. Let me walk you through a few things first, because I know it's going to be a little all over the place, but we'll walk through it together. First things first is, let's say you come across a property. It's either going to be on the market, or it's either you're going to be working with the seller directly. And I'm sorry, I'm looking to my left. I'm looking at my left screen over here. But first things first, you come across a property, and the seller that you come across is interested in selling their home for $764,000. I always like to ask sellers or even real estate agents is, how did you guys come up about with the property's price? Was it like just a random, or did you do some research? Basically, how did the price come about? Like, why 764? Why not 760? Why not 770? Like, why whatever price they came about, why that price? Sometimes you gotta get the plain answer. That's what I want. That's what I don't want to get. That's what I'm looking to get out of it. All right, cool. That's perfectly fine. So we come across a property. The seller is looking to sell for 764. We want to understand how much repairs the property needs. So now we have to ask a series of questions. Okay, Mr. Seller, how roughly how much do you think the repairs need, like on the property? Maybe they don't know whatsoever. So they give you like an estimate ballpark, but they're not really professionals unless there are really professionals in terms of like contractor or building or just designing and just doing any update work, then they might know, but most of them might really not. But maybe when you get a chance to look at the property in person, or even just have like pictures of the property, you estimate that the property needs $80,000 worth of repairs. So that's step number 2, finding out the repairs. Now, the next process, which we're going to do this live, but after I go through all this, is next process is understanding how the area is looking like. So now we want to find out what the ARV is. how much can the property sell once it gets fully updated? So what we want to do with this process, or step number three, is we want to find our 3 to 5 comps. And we noticed that based on this area, we can find comps. We found that the ARV for this specific area, it's just a random area. There's nothing specific over here. Something that I find out about this area is that the ARV for this project is going to be $875,000. All right, cool. This is where we start getting into like that formula of the investor. So the property is selling for 807 can sell for $875,000, and then the property needs $80,000 in repairs. I'm gonna subtract those two as an investor, and I'm gonna have this new dollar amount, which is gonna be 795. From that dollar amount of the what the property is worth after it gets after the expenses of doing the repairs, this is where I have to multiply that 70% rule. So 795, I multiply by 70%, or basically 30%. 70, if you multiply by 70%, or you subtract 30% from 795, it's going to give you the same number, which is going to be $238,000, $238,500. Now, after finding that out, part of that 238 is going to be 20% is going to be profit, and then the other 10% is going to be closing costs. Part of the strategy as a wholesaler, sometimes you're able to tell the seller, again, just because they're selling it for way too high, hey, Mr. or Miss Seller, we can pay your closing costs, so that way we can expedite like your process of selling like your home or acquiring like your home. There's no real estate commissions whatsoever. So our offer, whatever offer we bring you, is definitely going to be a cash offer, and that's what you walk away with. The only thing you have to take care of on your side is take care of taxes. So that's something that, again, part of the closing costs, if you want to pay for the closing costs for the seller. So now, as the investor, my highest offer that I'm willing to pay for this property is $556,500. So the way that goes is, again, you multiply 795, which is the new price point after the repairs, and I multiply by my strategy, 70%, which is going to give me $556,000. So now as an investor, I know how much I'm able to, how much I'm willing to like pay for it myself. Now, that's the investor side. Now, as a wholesaler, maybe as a wholesaler, you're doing the work for an investor, or for all these partners and investors that you have under your list. Is, let's say you, as a wholesaler, you were able to negotiate with the seller directly, and you were able to get the property under contract for $550,000. So far, it looks like it's a $6,000 wholesale fee. But hold on, don't overstep of yourself right now. Because now what you want to do is you get the property under contract for $550,000. But that doesn't mean that you have to sell it to your investor for 556. Because now let's break it down. You're trying to make a 15, maybe $20,000 wholesale fee out of it. Now, what you want to do once you have the property under contract, because again, your negotiation skills are really good. You're able to empathize with the seller. You're able to understand their situation, but you're putting yourself in, instead of being you're putting yourself into being the solution for the seller. That, again, that's what got you the property on $550,000. Is now you want to sell your assignment of a contract. So you're gonna do a assignment of a contract sale, or AKA sell the contract to assign this home, and you're gonna be selling that assignment of a contract for $570,000, which is going to bring you a $20,000 wholesale fee. And what that's going to do is, and all your buyers is going to put them on the spot. Like, if you're interested on this property, this is how much I'm selling it. But we have to understand their perspective as well too. And part of the perspective is, how much is the investor going to end up purchasing the property for? So if they buy the property for $570,000, you had told the seller that you're going to pay or AKA your end buyer is going to be paying the closing costs. The investor is going to be paying 10% of the closing costs, which is 10% is part of the 550, or what we got on the contract for. The $20,000 wholesale fee is something extra that the investor is going to be paying themselves. So that's going to be separate from the actual purchase of the property. So they buy the contract for 570. Again, that's like all costs with your wholesale fee included. Um, then you're gonna be paying the closing costs for the seller as well too. And additionally, they have to spend $80,000 worth of repairs. So the investor or the end buyer, their total investment in the beginning is gonna be $705,000. You're like, oh man, is that's cutting it a little bit. But let's continue breaking it down, and now let's get a perspective from the investor side as well too. Because again, it's good to understand seller, wholesaler, aka you, if you're trying to be a wholesaler, or if you're an investor yourself as well too, by all means. Now let's break down the investor side of things. So the investor can sell the property for $875,000 once they fully fix the property, right? They spend the $80,000, maybe plus, maybe minus, who knows? They do have to pay the agent to sell the property. They have to spend, they pay the buyer agent and the seller's agent. Again, it's up to the investor how much he wants to pay. So I'm gonna say he's willing to pay 5%. So that's going to be deducted from the profit. So $43,000 deducted. Uh, the investor's going to be paying closing costs again. So they're going to be paying $35,000 worth of closing costs. So now this is the investor's um, gross profit. What I mean gross profit is we still haven't deducted a couple things. So the new gross profit is $796,000. But now we have to subtract that initial expense, which the initial expense, if you guys remember, was that $705,000. So we subtract those two, and if you guys could have guessed it, now the actual profit for the investor is a $91,250 profit, which instead of being a 20% a profit, it turns out to be an 11.48% profit. And a lot of investors, they'll definitely be satisfied with that. I know a couple of them that are really satisfied with like 50, 60 thousand, $70,000 in profit. So if I bring a property that makes them $91,000, they're for sure gonna definitely be happy with it. And that's what I want to understand from buyers is whenever you're reaching out to buyers, understand how active they are and also understand what kind of profit are they looking. Are they looking for a percentage? Because sometimes some of them like percentage wises, and then sometimes some of them like dollar amounts. I prefer the dollar amount, so that way I'm able to like find whenever I find deals, I'm able to understand how much profit they're going to be making. Something else they like to break down to is called margin. Margin is based on the profit divided by what the property's ARV is. So that's how margin gets calculated. And then sometimes some of them like to go based on ROI. So the sky's the limit on how it goes, but that's basically an entire breakdown on how much that if this makes it a good deal for the investor or if it doesn't make it like a good deal for them. As you guys can see, this is still a pretty good deal. It went from being a 159 potential profit all the way down to a $91,250 profit as well too. So like I said, it's still a plus or minus game as well too, because again, if the investor was able to lower down the expenses, or maybe they took away some of the things so that way they're able to make more profit, cool. The ARV, the 875 price point, that's how much the property can sell for. But if they do a great work, sometimes maybe there's going to be buyers that are willing to pay more than 875. So the property can sell for more than what the ARV is at times, and that's what's going to increase their profit as well too. So when I look into profit, I think about it again being a plus or minus game, because again it all really depends as well too. And then of course there's going to be like other expenses along in terms for like the investor. But again, it's always good to like understand that real estate, it's a plus and minus game, and but also understand that it's going to be definitely a numbers game as well too. So if you guys have any questions about that, like I said, save your questions. If you have any questions right now, you can ask them, or you can save your questions until the end, because I want to start analyzing some properties as well too. Because now we have to understand how can we find that ARV, or how much can the property we sell for that. All right. So if any questions, I'll answer them along the way, as long as I switch over from this over to looking at properties. If there's no questions, that's perfectly fine. And again, if you happen to have an address of a property you want to get analyzed, by all means, drop the address in the chat. But let me head over here so that way I can start looking for some properties. So part of this is let's look for some properties. I'm gonna do a spin the wheel over here so we can get a random city. And we're gonna have Gulfport, Mississippi. Yeah, let's check it out. Gulfport. Actually, let me let me do the Luth, Minnesota. Just because I've done Gulfport a couple times. The Luth. Uh, what was it? The Luth what? Minnesota. The Luth, Minnesota. And so I don't know how to spell Minnesota right now. And this thing is glitching out on me as well too. So let's play the patience game over here. That's not working. Let's do Zillow, Duluth, Minnesota. All right, cool. Let's check out some properties. So let me reset some of these filters. And let's see what kind of properties. So I'm going to be using the ARV calculator. So this is the ARV calculator for me where I put all the basic information of the property, the potential repairs, again, plus and minus, understand how much as an investor I need to resell the property for. This is where we have to be looking through our comps or the ARV found section. These are our comps, so that way we can understand how much the property can sell for. And then the full investor breakdown. So everything I just broke down to you on how much the investors wants to purchase the property, how much they get to pay their closing costs. We already know the repairs as well too, and the profit. That's basically all broken down into the calculator over here for you guys. So all literally you have to do is look for properties, get the information, collect as much information, ask questions, and understand from there. And if it's a good deal, then start submitting some offers. So, but we gotta walk through this together in just a moment. This is Duluth. Let me take the board out because I don't know. So it looks like it's a small city over here, but I'm gonna do this whole section. But I want to see the county though. Duluth, um, Minnesota. It Duluth, Minnesota is in what county? Let's see. What county? Usually says it over here too. The Great Lakes Aquarium. No, I don't care about Great Lakes. Man, why is this thing being so slow right now? I apologize, guys. And ladies, guys. I don't know who's watching right now. Um, I'm trying to find this, but it's not Duluth, Minnesota. Looks like my internet is just being really slow right now. But let me pull up just a random property. I'm gonna go to the details really quick. I'm just trying to look for the county because I want to go broad in terms of like county. Um, and the county is SIP, Duluth, St. Louis County. Okay, St. Louis. That's weird. St. Louis, St. Louis County, Minnesota. All right, cool. You guys can see. Oh man, St. Louis County? This is the whole county? Oh God, that's a giant county. Man. Whoa. I mean, they're small. The population is probably smaller, but geez, I did not expect for that to be that big. Okay. That's that's a giant county. Honestly, like that's a big county that I've seen in a long time. Dude, that's whoa, that is crazy. I'm sorry, I'm that's a big county. That's the first big county I've seen like that in a long time. All right, so let's look for single family homes. And what I'm looking for here, these are my filters when I look for deals. I look for properties that are 1,000 square feet and higher. I like to stay away from 55 plus community homes. And the other thing too is I look for properties that our max build is 2010. Anything below 2010 as well too. I'm not looking for brand new construction homes. And what I'm seeing with this city and county on Duluth, because I'm checking Hermantown as well too. So like my whole area right over here, I see that it's really close to like the water. So it's either a lot of these properties are going to be very expensive, one. or two, a lot of these properties are going to be are sitting here for a long time because there has to be a lot of people that are really interested or have boats as well too, that are really interested in being living close like the water. And usually living close to the water is it's a little bit cooler as well too. And I know for sure in Minnesota it can definitely get cold as well too. So that's another thing that I'm putting to my factors as well too. But biggest thing, what I understand about this is there's all these cities, and what Zillow does is basically they give you what the potential ARV is on the properties simply by scrolling down. You scroll down, 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 down to these section nearby the Love City homes. Basically, Zillow tells you how much properties are selling for. Again, this is just average. How much properties are selling for each single city in near Duluth. Like I said, Hermantown is right here. Lockett. So like all these cities are nearby around this area. Um, and basically, Zillow is just doing the homework for you guys, basically in terms of like the ARV. So if we look at the Loft homes, a lot of the Loft homes are selling for like 248. That's already that could be potentially already fix and flip or just like the average. So it's a mix of a little bit of everything, but basically that's a little hint to give you guys from there. But now let me look for some project properties. Let's see what it is that we're looking ourselves into. And it looks like a lot of these pictures are snowing, snow pictures. So, like I said, Minnesota can definitely get cold, and it can get as cold as snow cold as well too. So I'm looking for some properties that just need some type of like work over here. I'm seeing a lot of these homes already kind of beautiful, really great condition, as well too. So let me sort this out by like the lowest price so that way I can get an understanding. And so far, here we go. We have this good project. It's been sitting on the market for 95 days, right over here. And let's check it out as well too. And I got a feeling this could be kind of like a historic area, and just by the pictures. There's like a great church right there. A lot of these homes look Victorian style. I'm from San Francisco, so and Victorian styles like are just those classic giant homes. I'm not sure if you ever guys watch Full House as well too. So this looks like it's kind of like in the middle of the city, or close to like downtown area. So the location is really good. Now the thing is we have to worry about is those high traffic roads as well too. And there's not, come on. What's up with these pictures? Oh, here we go. Man, there's the truth right there. Shabam. So again, this is in the city of Duluth. So again, we saw earlier that the potential ARV for this property, they sold for like $300,000. And then this property is well below, but you guys can see it does need a lot of work. Hey, you want some pizza from Domino's? There's some leftovers right there. Um, but let's see here. This is it. If you guys can put it on the chat, so far, what are you guys seeing this as in terms of repairs? Is it on the light repair section, on the average repair section, or is it on the gut job repair section? If you guys can put in the chat, just type it in. You guys tell me what are you seeing so far? Anybody answer? Oh, nobody answers. It was good. Definitely gut job. Yeah, this is a full gut job type of project, and especially and it's in a great location. I'm surprised it's been sitting here for this long as well too. But let's start looking into some of these numbers as well too. So let's say I'm trying to fix and flip. They're asking $80,000, which it's definitely negotiable. The property, it is a big home, off the bat as well too. 2048 square foot home. 2080 or 88? 88, I think. Oh, 2048. My dyslexia, man. My dyslexia sometimes. Basement. I don't know if it has a basement. Let me go through the details really quick. Basement, crawl space. Okay, so no basement. Um, I know I'm going a little bit fast, but it's right here, crawl space. So usually there's no basement at all whatsoever. Um, but let's look over here. Usually the description from the agents could be like great opportunity. Oh, home was a one-time duplex, one bedroom. Okay, could be easily converted back to a duplex. Home is the fair maintenance condition, both in and out, and is in need of a clean and repairs. NOS will need to be gutted. Okay. Um, so this home definitely needs a good amount of gut job repairs. And off the bat, if you guys remember what the gut job repairs are, is between 45 to $60 per square foot. I'm gonna put it right up there just because again, there's gonna be unexpected expenses as well too. And if it was being rented out, which I'm kind of shocked as well too, if it was a duplex in the past, I don't know what happened there. But if it's gonna be usually if it's gonna be like a rental property you're gonna be putting rental materials. So honestly, the cost can come down, but it still needs a lot of work in terms of it. So usually I like to play it very safe. When mean by very safe, I like to add $5 extra per square foot, just as worst case scenario. So I'm projected more like on the $130,000 to be like the repairs. Again, it's a plus or minus game. So I'm not gonna be spending freaking a whole hour just trying to figure out what the dollar amount is. I'm just want to get understanding for my investor side and also for understand on my perspective as well too. So let's break it down. Well, this is what the agent is telling us. If we were to buy this property for $80,000, we pay the closing costs for the seller, right? Because we want to negotiate a little bit, and we have to do $133,000 worth of repairs. As an investor, I need to make my profit. So let's say I want to make my 20% profit. Again, it's 20% in the beginning, but later on, as expect more expenses start coming down, you guys saw from the example, it can come down to like 11, 12%. So we always want to start at 20%. So 20%. And so that means I need to resell this property for $265,000. Again, earlier, even before I looked at the property, I scrolled down to Zillow, and Zillow gives me what the potentials are already. And it was telling me that, I thought it was like 298. The property the ARV is $248,000 for the ARV. But again, that's an average because it's a mix of like different condition homes. And some of those homes are definitely be some fix and flip deals. So we're not too far. So the price point it's not too bad for this because again, we're not too far from that potential ARV. But we have to do our homework, so we have to find out exactly. Now, if you guys see this versus and the other side, now I have my purchase price. If you guys look a little earlier, there's this section right here called my possible purchase price. So this is how me as an investor, this is how much I will buy it. Again, this is already buying at the 70% formula. And if you guys select different options, there's the fix and flip option, there's the buy and hold option, there's the wholesale option as well too. So if I want to wholesale this, I need to get it. My highest offer, potential highest offer is $52,000. If I want to fix and flip this, maybe I want to do this project for myself, then the most I will pay for this project is $56,000. And so far, it's definitely doable for two reasons. One is because the property has been sitting for way too long, $95, sorry, 95 days already. And then two, it just needs like a lot of work as well too. Um, so again, my offer is not really gonna hurt anybody, and it's really not gonna hurt me if it gets rejected as well too. It's just I can play two routes. I can play the patience game, or I can move on to something else as well too. So those are gonna be my two routes. If I wanted to like buy and hold, maybe because that's what the description said, this was a duplex, so it could be converted back to a duplex. Then even as a buy and hold investor, this is the most that I will pay for like this property, $64,000, nothing more than that. But what this does is on that versus side, it tells me how much my property needs to like resell for. And if you guys can see, based on the buy and hold, it's going to be a little bit lower, close to like what the properties are going for. If I change it to back to the fix and flip, which this will be a good fix and flip deal, honestly, then that's where we are in the price point of how much I need to sell for. But I got to do my homework. So now comes the part of looking for past, present, and future, where we got to look for what has sold in the last 6 to 9 months, what's currently under contract based on the parameters, and also what's happening, what other properties are in the area going for this much as well too. So I'm gonna duplicate my tab just because I want to leave my subject property open, and then I'm gonna use this new tab to look for again past, present, and future. I'm gonna start with present and future because that's gonna give you the fastest information right away. Um, because we're already looking for properties that are either on the market, and it's literally a press of a button that's going to give us the information on what properties are selling for in the what properties are in the contract at the moment. And just like before, this thing is just taking a very long time, so I apologize for the big delay over here. Meanwhile, this thing decides to load up. If there's any questions so far, by all means, drop it in the chat. Oh my God, come on. Sorry, guys. Yeah, let me look for this. What I'm gonna do is I'm gonna go through Zillow one more time, and these all these properties, man. I go up here. So what's going on? Is the internet like slow? What's going on? Let me do a speed test. Figure out what's going on over here with this internet. I'm not gonna be overpaying for this. All right, cool. So here's our subject property, the $80,000. So, okay, so there's no filters over here. And again, this can be done both on Redfin, Zillow, Realtor.com as well too. There's this little button right over here where it says under contract or pending, and bam, that little button is gonna give me whatever's happening over here. Where are we at? My internet is fast, so I think it's just these platforms that are just having some difficulties whatsoever. Um, in terms of like on their side. Maybe I need to clear out some cookies or something. But let me look for some properties over here. So my subject property square footage is 2048. So now I got to look for these specific, this is where I want to set my specific filters. So it's a plus or minus 300 square feet. So it's going to be down to like 1700. It's supposed to be yeah, that's fine. 17 and then 2048. There's no 23. It's 2250. That's kind of pushing it a little bit too much. So I'm gonna go with like 2500. So that way I'm able to see exactly how much these properties are going for. Man, Zillow is just what's going on? All right, so now let's go through right here. There's that button right there, pending or under contract. And let's see if there's anything at all. I'm just gonna continue refreshing this because this thing is just being very, very slow, man. Even over here on this side as well, too. Dude, what is going on? I guess this is what happens when I use these platforms for too much. Okay, so my filters are set up, and there looks like there's so this is what future future is basically what properties are on the market that are um properties are on the market that haven't sold. So again, that's the future is that there's a future potential of the property selling in the future. And then the present is basically what's pending on the contract. I'm seeing that there's nothing else over here, and unless there's like an issue with the like the loading, which there is honestly. So I'm kind of scared that there's something actually happening. But let me go through back to Redfin because it looks like Redfin is being a little bit more responsive. Let me set my parameters. So my lowest in 1700, 2250. So I have to do the same thing, 2500, like the most. And I have to check, make sure there's under contract. So it looks like there's no other properties on the contract right now. So present and future, those are not, there's nothing at all whatsoever from Redfin, and most likely same thing with Zillow. So now the only option is hopefully there's a lot of activity of properties being sold, especially for this square footage. So now I want to look for what has sold in the last 6 months based on my square footage. And Um, there's why is it doing 7,500? I don't have 7,500, I have 2,500. Okay, so meanwhile that's loading up. Let me go with Zillow and see what has sold. Okay, so it looks like we have something with Zillow, because again, Zillow is a little bit more popular. And let me look for properties that have sold in the last 6 months. So nothing in the last 6 to 9 months. There's these properties that are, so you guys can see, where's our subject property? Our subject property is on third. So our subject property is right over here, close to like this little circle right over here. Uh, so it's between Third and North Lake. So we have this major road called Mesava Avenue. So that's going to be like our major road off the bat. But I can also see North Lake Avenue being like that busy road as well too. And the way you can check through it is literally, if it lets me. Um, actually, I like to use a Redfin for that. Is let me go to for sale. All right, cool. Let's go through our property. Let me pull this up real quick. And if you go through Street Viewer, if you go through Street Viewer, I think North Lake is on this side. It's most likely going to be oh here. Here it is. So North. Oh, I think it was in North Lake. Um, so we have this double yellow line road, but here's the thing is sometimes you can make an exception, just because you want to see what kind of traffic are you getting over here. Because I don't know, maybe this area it's very like that where you're gonna see double yellow line roads, but it's not a double yellow line road where there's buses, construction trucks. It's just how the outline of like the area is for this. If I wanted to check like the other side of the street, it's probably gonna be like the same thing. Like right over here on this side. You guys can see it's just how the roads are set up over here. So sometimes don't be afraid if you come across a property that has double yellow line roads and it's like that. It's just again that's could be how the layout could be over here overall whatsoever. My God, this loading, it's really getting on my nerves, honestly. But the only thing with this is this property, there's not a lot of activity in terms of like currently on in terms of like the square footage as well too. That's the biggest problem is there's no properties right now like on the there's no inventory that has sold in the last 6 to 9 months. And again, that's as far as back as you want to go. If you're getting to close to like a year, you're gonna find some properties, but even these properties are not gonna be like the best fit because the rates a year ago are different than what's happening now with the market. So this property sold in July. That's just way too far out. It's within like the square footage as well too, and it looks like it's a big home as well too. Uh, double. Oh, so this is our home. Sometimes when you look at Street Viewer, it's gonna pop up like this, where it's gonna pop up in the back side of it for whatever reason. That's how Google really needs to work on that coding section. But that's our subject property right over here. You guys can see it's a big home. I don't know what the condition of it is out. It's outside. I mean inside as well too. It looks like the outside is really taken care of a little bit. I do see some outdated stuff like the windows. But I don't know what the full condition is internally. And I wouldn't say they actually taken care of it just by like the steps. Usually some investors they even go beyond of taking care like of little details like this, of making sure that the grass gets cut off as well too, and then just try to realign up like the steps as well too. Just little extra touches, extra expenses just to make it put as much detail into like the properties or into the fix and flip. But there's not a lot of activity whatsoever. So literally this is a high risk type of investment. It's in a great location. As I said, it's really close to like downtown. It's probably like in the historic area whatsoever. But in terms of like the property wise on what the potential can be, that's the thing is there's not a lot of projects happening in terms of like the square footage. So this is something that it's going to be like a high risk, but high risk have high rewards. But if you're going to be working a lot in risk, then you definitely want to make sure that you get it close to like the possible purchase price points. Because let's go with let's just play some games real quick, and let's say we actually find some properties and we find that the ARV can be close to like what we noticed like on the market. It's really close to like that $250,000 price point. Let's say that's what it can actually go for. Again, I'm just going to place on numbers right now. If you go based like on the numbers, the property needs $133,000 in repairs. And we were willing to pay the seller's closing costs as well too. So, and the property they're asking $80,000 worth of the property. So, based on that potential ARV of 250, looks like the property is priced right about there. Uh, in terms of like that deal, just because again conservatively it's gonna be around $81,000, but more aggressively this is how much the investor will end up purchasing the property for. That's like the most that they're willing to pay for it. So both of these equations are on different formulas. One is the formula where the ARV gets put in first, and the other one is where the ARV gets put afterwards. So this gives me the perspective of how much an actual buyer will want to purchase the property for. Now going beyond that, of course, that's the investor pays for like the closing costs. And additionally too, it lets us know how much the potential profit is on this deal. And so far it's very low for this deal. So honestly, for the amount of money that it needs in it to only make $35,000, it's really not worth it whatsoever type of a deal. So that's why this property has been sitting. And maybe it's been under contract in the past as well too, if anything, and maybe there's some extra expenses. But actually, no, it hasn't been on the contract whatsoever. It's been listed for just 90 days, but it's just probably either the repairs are just gonna working too much, and then there's no opportunity there whatsoever. So it's gonna be a challenging home to like really sell as well too. And there hasn't been a price reduction as well too at this point. Honestly, when properties are sitting, sometimes you go to come across properties that have been sitting for like 2 weeks and there's a price reduction. Even 30 days price reduction, 60 days, sorry, 45 days price reduction, 60 days, 95 days and no price reduction whatsoever. That's just hitting me red flags off the bat where they're going to be definitely firm on that price. So that could be like another thing. And so even getting the property at that possible price point, which was $56,000, is definitely not going to work just because we're probably going to get hit with, we're firm on this. If you can't do $80,000, then it's not going to be a deal for you. So that could be another issue why the property is just sitting for too long, is the seller is just strictly firm on that price and they're just not willing to negotiate. But again, I don't know the story unless I reach out right there. So I will mark this property as a no deal whatsoever off the bat. But again, I still have to do some research in terms of like getting more information. So it's always good to get that because it's a property that is on the market as publicly available to everybody to check it out. So that's my analysis on that. But this analysis is just not a deal whatsoever, especially not making 35 to like $45,000, maybe less. Because again, if you guys saw earlier as an example, it's 20% in the beginning, but slowly and steady, it just starts cutting down some of that profit from that. So this entire breakdown, hopefully it's able to help you guys understand that. Now the next example that I want to do is I want to look for, even on the same area as well too, I want to look for properties in this area that are in the rental side, because that's the other type of analysis, is understanding how to calculate a lot of the rental analysis. And again, if you guys want to have access to the calculators, head over to eltonvargas.com/calculators, and you can definitely subscribe to them there. You're gonna have access to all of these right over here. But now let's analyze a potential, if you can find something actually, a potential rental property. And let's see what we're able to get over here. So let me reset all the filters. Let me look for this like this, go to the multifamily side, and whoa, a little bit expensive there, buddy. Not a lot of properties on Zillow. That's perfectly fine. That's why I want to use my other resources. How do you say this? Duluth? English is my second language, by the way. Just giving you guys a heads up if you guys are like, how does he not know how to pronounce that? Yeah, it's just English is my second language. But let me look for some rental properties. This side is Wisconsin, so I'm not looking at Wisconsin, and there's not a lot of multifamily properties over here, which is good because that means there's a lot of homeowners out here, which but it really comes down to analysis if it's determined like a good area. Um, but not a lot of multifamily, which kind of sucks. I see this one that is kind of like away from like the city, so I really don't like that. So I'm gonna use a Zillow and let me see what we're able to find as well too. Sometimes you could come across properties that are single family as well too. Um, Single families that are rentals. But I usually when I look for rentals, either single family or multifamily rental properties, I want to look for kind of like this properties that are really like in good shape. The flooring, it's really great flooring as well too. You're gonna see a lot of gray and white. Maybe I can do like some painting on this property as well too. But really good shape overall for this home. Let's find out what kind of property it is that we have over here. So it looks like we have a triplex. So triplex means 3 units. Um, and the cool thing about this is the agent breaks down to us some information. So let me start putting some information into the calculator. They're asking $325,000 for this property so far. All right. Based on this, let's say I want to put 20% down on this property. Maybe now you're able to do like 10% if you wanted to. It's really up to you. But the lower the down payment you put in, the higher the monthly will be. And this monthly is principal and interest. So just keep an eye on that. You guys can see it between 10 to 20. It's a difference of like $200 more. So not a major change, but it also comes down to like the type of interest that you get. I'm gonna play it safe and go with like 8% for right now. So my initial down payment is gonna be $32,000 based on the 10% the down payment. And I'm gonna be paying my own closing costs. I'm not gonna be paying any closing costs on the seller side. Usually for a lot of rentals, you really don't. Occasionally, as a negotiation thing, you might, but again, I'm looking more as an investment for myself, not me personally, but just like perspective wise. Usually closing costs are between 2 to 5%. I'm just gonna go with like 4%. So 32,000 down payment, $13,000 closing costs. So my initial money that I need up front is $45,500. All right, cool. Now, because this property is a rental, let me understand where the rent is. And I'm gonna use Zillow rent estimate as one resource. No. I want to use one Zillow rent estimate as one resource, and the other one's going to be Zumper. So what I like to do with Zumper is type in Zumper average rent, and let me go back to my subject property, and then type in the city, state, and zip code, and let me paste it over here, and bam. Is sometimes going to be like the first tab, sometimes it's going to be like the second or other one. So it looks like we have over here um average rent in Hermitown. Is this property in Hermitown? Is it considered Hermitown? I think it is. I see Hermitown right over here. So I'm gonna go with the average rent in Hermitown, Minnesota. And let me check out what could this property go for. So let's go back to that 320. Oh, it's in Bayview. But Bayview, I don't know if this is considered Hermitown over here. I'm gonna play it safe and let's say it is, just in case. Let me go with Zillow. Let me put over here. Zillow's gonna give me a range on the property. So whatever the range is, whatever this number is always gonna be like the middle number between like the full range. So 1,800, 4,500. Honestly, it should be like 2,600. But you guys can see it gives you that gives you the range over here, what the potential is, but this is going to be like the main number. Do you want to really pay attention? You can play a little bit plus or minus game, but now we have to divide this number into 3 units. So if it's $2,500 per unit for the entire home, then we have to divide it by 3 units. So per unit, you can probably push it to like 850 per unit from there. So that's one resource. Now let me go through 4 5. Let me go through Zumper and let's go. It doesn't let me do. It's a 4 bedroom unit. Let's go with the house and let's see what information it gives me. And it looks like I can push this up to 3,400. So I'm between 2,500, 3,400. What's the middle between that? 2,900, 3,400, 2,500. Yeah. So it's going to be 2,900 in terms of like the rent. So 2,900 divided by 3 units is going to be nine. I'm going to play it safe, 950. Let's say 950 per unit. Just because there's no details here provided by the agent in terms of like what the rent is per unit. But that's perfectly fine. Um, and let's see what any entry. So tenants own washer and dryer. Apartment C has one plus bedroom, one. Okay. Um, then entry laundry, living room. Okay. Laundry area. Tenants own washer and dryer. Seller pays all utilities. Oh, okay. One gas furnace with 2 zones, one hot water, and off-street parking for 2 at each unit. Off-street parking. What do you mean by off-street parking? Oh, like right over here. Oh, okay, okay. Uh, so it's just how the home is built, like everybody's able to park on each side. So okay, cool. But there's no garages or anything else. I'm looking for some extra income because now that's what the next process is. Once you're able to understand like the down payment and the initial investment, we have to break down the rentals. So that's what I was doing. Sorry, I missed that step of letting you guys know is understanding like the rental side. Um, and it doesn't let me know how much each unit is either if it's like all 1 bedroom. Okay, so here, let me write it down. So A, B, and C unit. So A unit is a 1 bedroom, 3/4 bathroom. Okay, so 1 bedroom, 3/4 of a bathroom, whatever that means, whatever that looks like, actually. I mean, apartment B has 2 bedrooms, 2 beds, 2 bedrooms. Okay, that's all I really care about. Maybe an extra bathroom and 2 full bathrooms, so 2 2. So that's why the rent's gonna be varying like a little bit. And apartment C has 1 bedroom and 1.5 bath. So hey, that extra half bath can go to apartment number one because it's missing a quarter of a bathroom. So I have 2 1 units and one 2 bedroom, 2 bath unit. So I want to break it down over here. So let's remove zero studios. So I have 2 bedrooms, um, 2 bedrooms, 1 bath or 1.5 baths or a quarter, 3/4 of it. Next is I have a 2 bedroom, 2 bath unit. Uh, oh, only have one. Sorry, one. This one, that's where this one, the 2 bedroom, 2 bath can go a little bit more. So if the 1 bedroom, 1 baths are going for 950 each, that's where I can probably push the 2 bedroom, 2 baths to probably like $1,100 for that unit. Um, uh for it. So again, just like $150 more for it, just because again it has 2 full bedrooms, 2 full bathrooms. There's no extra garage. There's no all of them have like their own laundries. I can't bring any extra type of income. So this could be like my rent over here. 1,900 for the 1 bedrooms, 1 baths, and then for the 2 bedroom, 2 baths, this could be $1,100. So all in total, $3,000, which again is what we estimated. Zumper told us 3,400. and then Zillow was telling us 2,500. Um, but we were just trying to average it out because Zillow does tell me I can push it over to like $4,000 if I wanted to. But again, I'm gonna go with I really like that. I'm really confident with that $3,000 price point. Again, depending if they're not already paying this much, maybe they're paying less. So that's another thing I have to worry about. But now let's break down some expenses. So I'm able to make $3,000 for each single month. $3,000 times 12 is going to bring me a total of $36,000 of gross income. Now I have expenses. Um, these expenses don't include my mortgage. My mortgage will come afterwards, but these expenses do break down as following. I could break it down to the dollar, but I'm gonna stick to like some of my standard rules. But what these expenses look like is going to be taxes, insurance, HOA, if there's any maintenance, if there maintenance for sure, because Minnesota has I have to worry about the snow, maybe even cut some of the grass. I don't think I had any grass actually. It could have some grass, maybe like in the springtime. But that's gonna be like the maintenance, anything else. And it looks like I have to pay for the utilities as well too. So maybe I can turn that around and have the tenants pay for the utilities. I only want to pay for like my main lighting or like my main areas of lighting, utilities. I don't want to pay for like all the utilities because and who knows what those numbers are going to look like as well too. Then I have to worry about vacancy. If anybody wants to move out during the time that it gets moved out, I want to make sure I have some money put aside. And I'm not in the state of Minnesota, so I'm gonna have a property manage it for me. But again, that's breaking down to the dollar. I'm not gonna break it down to the dollar. I'm gonna go based on my two. There's two rules. If I'm gonna be managing myself, then it's gonna be a 30% percentage and it's going to give me a dollar amount. And if it's going to be a standard rule of having somebody else manage it for me, then I'm going to go with like 40%. Again, I'm out of state. So this is going to be an out of state standard rule, which is going to be my total expenses are $14,400. It could be, it can definitely be less. But again, I'm just playing it safe for right now on my rules. So my subtracting my expenses from my gross income, $36,000 minus $14,400 is going to bring me a net income of $21,000 or $1,800 of income every single month. But now hold up. I mentioned part of my expenses is I'm not including my mortgage just yet. So now my analysis breakdown section is breaking down my mortgage. My mortgage for the entire year is $25,000, $755. So if I subtract 21,000 minus that mortgage or AKA debt service, that's what mortgage is, debt service. If I subtract those two, then that puts me at a negative price point, which is brings me at a negative cash flow, or I'm losing money each single month. I'm already losing $350, or AKA I'm losing $4,000 each single year. So far, this is not an investment that is going to bring me some money. So um, there's two things that I'm able to do in this case. If you guys have been paying attention, you guys can take a guess. There's no wrong answer over here. Can you guys take a guess on what are two things that I can do to make sure that the property brings me some income? What are two possible things that I'm able to do? You guys can put it like on the chat. I'll wait for you guys to answer that meanwhile. If you just take a random guess, what are two things? You can just list one of them. If I were to do one thing to make this property bring me some money every single month, what's something that I can do? No answers is perfectly fine as well too. Um, First thing that I can do is get the property at a lower price point. All right. If I get the property at a lower price point, then that again, lower price point is less payment on the mortgage, less more principal and interest. So that's one thing. And the second thing that I can do is I can raise up the rents as well too. So maybe the 3,000 price point is maybe just not making it for me. So maybe pushing it to like 35, maybe even 3,500 can definitely bring me some money in. But I like to go step by step. So the first thing I want to do is focus on the price point. Let me get a better price point. Because now what this analysis section is telling me a few things. First is gross rent multiplier. And what rent multiplier basically means is the property's price right now, the $325,000 divided by the gross income. It's a little bit high, not too high, but it's at a price point where it's not making a little bit of money. Usually when the number is lower, then the lower the number on the gross rent multiplier is going to give me a better return on it. Next is we have cap rate. What cap rate is basically risk. As simple as that. The lower the cap rate is, the higher the risk. The higher the cap rate is, um, it's going to be less risky, but now you're focusing on neighborhoods that are blue collar, or they could be like class C, class D type of neighborhoods as well too. So the risk is not to be on the property. The risk is going to be more like in the area that you're mainly in, and usually you're going to get a better deal on a lower in lower class areas because you're going to be able to get it at a better price point. But the thing is, the property is not going to be growing exponentially because it's not going to be an area that it cannot grow any further than where it's at the moment. It could eventually, like down the line, 20, 30, 50, 60 years, it can definitely like develop if there's any changes along the way, but that's going to take some time. But based on at the current market right now, the lower the cap rate is, the higher the risk of the investment is. So right now we have a 6.65. And I don't know what this means because I don't know what the average is for this area. So I have to do some research on what the average is, what the average cap rate is. Um, what the average cap rate is in Duluth, Minnesota. And it's as simple as Googling it. If I type it in over here, average cap rate, Duluth, Minnesota, it's going to tell me that the average is 6.52, a low is 4.50, and a high is 9.0. That's from that example. And I'm looking over here at a realtor. There's also City of Duluth section as well too that can give you some information. But it looks like 6.52. It's like the average. So I'm right there on the average. But it does say that I can push it as high as 9%. So then now going back earlier, that there's two things that I can do. First things first is the price point, because the lower the cap rate is, the higher the price of the property it is. So here, let me give you guys an example. Right now we're at 6.65. It's not gonna be like right on spot on, but basically this is close to like our price point of a property. If we were to go down to like 4% or like 4.5%, you guys are gonna see that the price point of the property is gonna be higher. Now let's say we put the price point at the cap rate at 15% cap rate. You see the price point of the property just significantly drop from there. But we already kind of got like a picture of what the area looks like. The area is between 4.5 to like 9%, and the average being at 6.52. So I'm gonna start my negotiations. If I know like the highest that I could push it to is 9%, I'm gonna start my negotiations a little bit higher than that. So let me push it to like 11%. And what does 11% tell me? That instead of buying the property at $325,000, I can submit an offer of 196,000, or I'll call it even $200,000. So that's $125,000 difference of the price point. It is a huge significance, but again, I'm just pushing it. I'm not saying it's a guaranteed whatsoever. I'm just starting my negotiations kind of softly so I can get a perspective. But let's say I'm able to, at the end of the day, I'll get in touch with the agent, and we're able to negotiate something close to like 8.5%, or even something, I'll call it at 8%. That brings me down to $270,000 that of the max offer that I'm going to be willing to put into this property. So let me change the price, because again, the first thing I wanted to focus on is changing the price point. Because if I change the price point, then my mortgage is going to be changing. Because so far my mortgage is the thing that is affecting me on this deal. to negotiate to not consider this deal whatsoever. But let me change the price point first. So now let me go back. Let's say we are coming into agreements, and I actually but before I even submit an offer of $270,000, I put it in. So let me put it in over here and let me see what it tells me. Everything's gonna stay the same. The down payment percentage, the interest rate is gonna stay the same. My rent, I'm not changing my rent. The only thing I'm changing is my price on my property. So I was able to get it what is this, $55,000 lower than asking. And that's $55,000 lower than asking. Uh, it puts me at a cap rate of 8%. Now the property is only cash flowing me $200 a year. I put it positively. My debt service or my mortgage, it did drop like a little bit. And as you guys can see, this gross rent multiplier, basically now that uh how much the money can bring into like this deal, the gross rent multiplier did drop a little bit as well too. But the main one that I'm focusing is on the cap rate on this deal. But so far, even at 8%, it's not really making me any money whatsoever. It's only $200 for the entire year, or AKA $16 each single month. Like, what is that going to do? But again, as a buy and hold investor, that's the game I'm playing. I'm playing the long-term game where, like I said, I can raise up the rents in the future as well too. And additionally, the other thing is the property is going to pick up in value, especially if the area which something I was mentioning earlier is understanding like the areas that we're looking into. Sometimes looking through Zillow, even Redfin, they talk about the areas as well too. From like the schools, what kind of school systems we're looking into. Um, what else? What else? Oh, Zillow changed it. Uh, Still did change a lot of the things as well too. Here, let me put in the property on Redfin. Redfin usually gives me a little bit more information uh, in terms of like, get away, get away, get away. Block that. Let me put the property here. Uh, why is it not popping up? The 55 810. This is my property right here. Oh yeah, this is it right over here. Let's check it out. Let's check it out. What's the public facts? Public facts. Now we start getting to the school. So the school system, what's around this home, car dependence. It looks like you have to drive in a lot of these places. Um, Flooding as well too. You want to make sure that you're looks like a 99% chance of flooding in the next 30 years. So that's something for sure I gotta pay attention to. Um, which Zillow does it through oh man, Zillow, I'm telling you, it changed a lot of the stuff over here, which is really crazy for me to see. They used to have like their flooding factors as well too. But man, that's crazy. Uh, um let me go with Redfin. Redfin's gonna give me a better perspective. So it looks like even the area that I'm in right now, there's a lot of flooding section. I'm sitting on a flooding area on itself. So it looks like part of like the backyard it gets flooded as well too. So that's not really good. Something wrong with this over here. I'm not sure if it's like the soil of it, but that's something I definitely want to keep in mind because again, when it rains over here or when the snow is melting, I don't know how it really affects it there whatsoever. Sometimes it could be creeks as well too. It could be additionally as well too maybe the sewers. There's could be like a sewer over here that just doesn't flow properly. So that's something major that affects my property as well too. So the property is already a high risk investment where it's barely making me any money. Now I have to worry about the flooding section as well too. Um, so I'm not sure how often that's a problem as well too additionally. But again, that those are the things that I'm looking, and that's what Zillow was. That's how I was able to find about this flooding because it's telling me that there's a 99% chance of that flooding section as well too. And you can get like a full risk report through like a risk factor. You can analyze like the neighborhoods as well too, in terms of oh man. Oh, because the property's not on the market, so that's what's not gonna give it to me. You can analyze like the property in terms of like the neighborhood, what kind of crime you're looking into. Um, let's see if there's like a lot of crime in this area or there's not a lot of crime in this area as well too. But there's again the property in itself is already like a high risk. So being a high risk, I want to make sure that I get it at a good price point so that way it can make me some money. Not just $200 for the entire year. I want to make sure it brings me some money. Let me see. And let's say I'm able to get it to $240,000 uh in terms of like the asking price point. If $240,000 brings me like at least 1,000, oh yeah. So you see that's this is how much I want to purchase the property for, just because it's bringing me in the thousands of income. Usually, I'm trying to aim for properties that bring me between like 250 to like $500 in cash flow each single month. So usually when I want to look for those properties, I look for properties that are fully updated, but the cap rate it's like significantly high up there, but also like either the area it's again it's going to be a class C or a class D, but it's getting developed, so there's going to be like a lot of potential in the future as well too, where again you can raise up like the rents. And you just have to like understand that. Something simple as well too that you can do is look through like the neighborhood as well too. Seeing off the bat, I'm seeing this major road. I don't know if there's like a high traffic road. There's construction trucks happening here. Also that's why it floods over here. Ah, see how there's like that little you see something as simple as looking through Street Viewer. What is this, like a small creek, like a little pond? So I mean, it does dip, so it's not too bad, but hey, that's something extra that you can do right there. I usually do it. I don't know why I didn't do it from the beginning as well too. But there's like a little creek or like this little thing as well too that again, especially if it snows over here in Minnesota, all the snows could be melting right over here. I don't know if it extends or it just sits there all the time. So that's why it was marking as a high flooding zone. But it doesn't look too bad at all whatsoever. And then what do we have across? I don't know why that's blocked off, but as soon as you click over, it's not blocked off. I don't know what building that is. Looks like this is a fire department. Sewer and dumping. Oh, cool. So my dumping fees can definitely be less over here, if anything, in the future. But I don't know what this building is over here. But it looks like a really good neighborhood. And oh, this is parking. I thought this was cars moving. Oh, never mind. So really good. It looks like a lot of these homes are really taken care of. The roofs look really good. The painting on the outside looks really good. Um, this is a all wood home as well too. And what I like to do about Street Viewer is look for other properties. Like what kind of other projects can I jump into as well too? Um, because if I find sometimes you can find other opportunities just by doing virtual driving for dollars. And this is where virtual driving for dollars is. It's you're driving without having to be in there, and you're looking at like the properties, what kind of conditions they're in. Um, and understand uh, what kind of other opportunities are happening. A lot of these have like a lot of land, and honestly, I like how there's a lot of trees as well too. So it just really makes a lot of the homes pop ups as well too. And then sometimes you can come with something across like this where there's a car in the middle of this landscape, but I don't know. There's like a land over here that could be there could be a housing to get developed as well too. And earlier I was mentioning that sometimes when you come across properties that have a lot of lots, is understand the zoning as well too. So if my property is sitting at the corner and it's already a triplex, then a lot of these homes they can get converted into like a multifamily units as well too. So sometimes it's even just doing a complete demolish and bringing townhomes into like the area. And if you bring townhomes into a again, that's gonna be a development type of project and a developer investor that is willing to take on that. But that's something that can definitely happen with some of these properties, especially if you come across a property that it's like really not it's a really bad shape or it's just not really getting taken care of. But so far, I can see that all these homes are really getting taken care of. But again, it's all about just looking, because you can find that diamond in the rough, um, and especially if you beat agents, because if there's here's a tiny little home as well too. So there's one project right there. Just look at that. I will definitely want to get in touch with this homeowner, just because the outside is not getting taken care of. Maybe they're a little bit older um, homeowners. So who knows? This is a great home, jet ski. So, hey, driving for dollars really significantly helps out on finding like your next opportunity, because you never know what you're gonna be able to find and who might be motivated just because the property sold down the street as well too. But that's my entire breakdown. I know it's very informative um into it, but hopefully you guys were able to learn a few key things in terms of like how to like analyze some deals both on the fix and flip and the rental side, get an understanding of like the breakdown of how an investor thinks and what kind of profits they're looking to like make as well too, where your offer should be making. When you're looking at a lot of these deals. But again, what helps me expedite a lot of this process is these calculators that I have designed, just because I'm putting in numbers. And that's what real estate is literally down to the numbers. But it's also making sure that you're collecting all this information about the property details, understand zonings as well too. And additionally, like understand like the whole neighborhood. And the better you're able to understand neighborhoods and markets, it's gonna be easier for you to if anybody sends you a deal, and especially if you see like the city or like a zip code, you already know what the area or what the potential ARV is. But again, if you don't, like I mentioned earlier, Zillow does the homework for you, and the homework it's already right over here, just by looking at all these numbers. And that's really going to help you exponentially expedite like your process as well too. So hopefully you guys were able to like learn a few key things, like I said, that I pointed out just now. So I'm gonna leave it open for some Q&A. If you guys happen to have like any questions, you are able to unmute yourselves now. You weren't earlier, but now if you wanted to like speak, you're able to ask your questions. Just unmute yourselves, or if you don't want to talk, you can put your questions in the chat as well too. No questions? Okay. Hey, that's perfectly fine. Again, if you guys do happen to have like any questions, or if you need help, any type of guidance, like I said, I do one-on-ones. Just head over to eltonvargas.com, and then from there you're able to set up more one-on-ones. Can you explain the cap rate a little bit more? Oh yes. So cap rate again, cap rate. This the strategy for cap rate is simple as this: any buy and hold investor always wants to buy at a higher cap rate, because at a higher cap rate, if I, like I was mentioning earlier, higher cap rate, lower price point, lower cap rate, higher price point. So you basically wanna in real estate is buy low, sell high, just like stocks as well too. So with cap rate is, but what cap rate tells you is risk. So if the cap rate is very low, then the price is going to be very high. And if the price is very high, but the property, the third subject, so the triangle method, I'll call it, because so far I have my tip point is cap rate, then I have my price point, then the next point is going to be rent. So the rent that the property can bring versus the price of the property is going to let me know how, and of course, after all the expenses, everything is going to give me the cap rate. So the cap rate is going to analyze the risk. So lower cap rate, higher price, and the rental is just not catching up to the price. It's going to be a higher risk investment where it's going to take a long time for you to recoup your investment. Now, if you come across a property and the cap rate is high, then the price point is going to be low, but then now the rental is definitely going to be, you're going to be making some money on it. Just because again the price point is very low, so your mortgage or your monthly payments on and your expenses are going to be very low, but it has to also as well too has to make some money in the rental side. But now, whenever you want to sell that high cap rate investment, then you want to sell it at a low cap rate. So you buy, so for example, this one, it's a 9%. We buy it at a 9% cap rate. Whenever I want to sell it 15, 20, 30 years from now, whenever I want to sell that property, I'm going to be selling it because it appreciated over the last 15, 30 years, however long I want to keep the property for. It appreciated in value. So now the price of the property is high, but maybe I raise up like the rent as well too, or maybe the rents don't change as much as well too. Then I want to sell it at a lower cap rate, maybe from 9%. Later on, I want to sell it to like 5%, maybe 6%. And again, I'll work in the negotiations. But what cap rate tells us is going to tell you the price, the rental, and also understand like the neighborhood as well too. So all those three you put it on together is where the risk comes in. So low cap rate is going to be a higher risk. High cap rate is going to be a higher risk, if that makes sense. Hopefully, I was able to answer your question, Eric. Uh, if you happen to have any other questions, let me know. Thank you. I know. My pleasure. My pleasure. Um, any other questions by any chance, or anything else that I touched upon? No? All right. Well, that's gonna be my pleasure, my pleasure. That's gonna be pretty much our wrap for today. I really appreciate you guys joining on today's session. Again, this gets recorded, and it's gonna be available on my website for the recording, and then any other trying to unmute. You should be able to. Oh, there you go. Sorry. Hey, you can unmute yourself, Jason. Here, let me let me try to unmute you on my side. But yeah, there you go. You should be able to unmute yourself now if you want to ask your question, Jason. Did it work? No? I don't know if you want to drop like your question in the chat by any chance. Like I said, you should be able to unmute yourself right now. Not sure if there's some technical difficulties happening. What do you recommend starting out in real estate? What are you trying to start out in? Are you trying to start in Airbnb, fix and flipping, buying and holding, um, wholesaling? It really depends on what business. Just think about that. It is going to be a business in terms of like real estate, because real estate in terms of business, I mean, real estate is a business that it can definitely help you out significantly, especially over time, 5, 10, 20 years, 30 years. So it really depends on which business you're trying to start it in. But if you talk about like education wise on like starting out in real estate is uh or maybe you're trying to invest for like yourself, trying to understand the market and eventually starting fixing and flipping. Okay, so if you're trying to understand like a market, like I said, I just walked you through understand like a market, whatever market you're looking into is first you want to make sure you understand like the language of real estate. The everything I was just going through is the language of real estate that it didn't take me one night for me to learn it. So I was watching a lot of videos, I was reading a lot of books, I was networking with other I was attending network events so I can connect with other investors as well too. So you have to put yourself in that position, in that environment so you can learn like the language. So if I put you in, I'm not sure, uh, let's say if you're a cow farmer. If you're a cow farmer, you can't just dive into it. You have to like understand like a lot of the things first before you dive into it. So just like anything is put yourself in that bubble and then start, that first bubble is going to be like your learning phase bubble, and then just start gaining, pick brains, start networking, just start getting into like the language of everything. Um, Especially with fixing and flipping. I have some books in my website on my educational side, that there's some books, some free books that are there, that you can read as well too, to like help you get started. But first thing is you have to invest, either gonna invest some money into somebody like teaching you, coaching you, or just guiding you, or you're gonna invest time. You're gonna, one of those two has to be invested into it. So if you're like, I don't have the money, I definitely have like some time, even like an hour a day. That's that's gonna help you put you in that process of getting yourself educated on where it is that you want to get, especially in fixing and flipping. Fixing and flipping, you're definitely diving yourself into how much repairs are, what kind of deals I want to look for, what makes a deal as well too. So you really have to understand what kind of things you want to look for. If you want to look for single family homes, yeah, also depending like on the price point. So these are a lot of things that you have to like kind of like put yourself into. So it just takes a lot of time. So like I said, either you're investing a lot of time, or if you like you want to rush everything, then you have to like shadow or have somebody mentor you to get you to have you like that expedited process. Just like the TSA, you have like the main check-in, or you have like the TSA pre-check, clear, whatever. You pay for it, that way you can skip the entire process. So it's the expedited version. So you have those two routes. But learning is literally the first phase that you want to get. Now, let's say you already have like some knowledge, you already have like some basic knowledge. Now, how you get into like the fixing and flipping business now is look at, if you're looking locally, that's one thing. If you're looking non-locally, so other states as well too, then you have to talk with somebody, aka agents are going to be really good to give you like that perspective. When I started wholesaling, I worked with a lot of agents. And a lot of agents can definitely give you a lot of information because they know their areas very well. Sometimes some of them have their license for multiple states as well too, so they're gonna have a lot of knowledge as well too. And sometimes some of them are investors themselves. So it's literally, you want to put yourself in a position where you're asking for help. Just be like a lost bird. I'm trying to find my way into this. I need help with X, to like understand X, Y, and Z. Um, so I each have to like understand, have somebody coach you through like that, and make sure like you're able to understand the business and what costs are in fixing and flipping, how long is it going to take to fix and flip on this deal. Are you going to be buying a lot of properties in cash, or are you going to be finance? If you're going to be financing, you need to work with like a local title company or a non-local title company, that kind of gets like your price point as well too, what it is that you're looking for. So again, those are level two steps. And you also kind of understand like the area. Like again, I just did an example of me. I don't know this area, Duluth, Minnesota, but again, all the information is out there. It's how you're able to read the information that you have accessible to, because we all have access to the same information across the board, and we all have the same amount of time. Is how do we read that information, and do we have like the knowledge to read it? And then also, the time that you're putting into like reading it and understanding it is definitely going to help you out. That's what I'm trying to find a mentor locally in Sacramento. Yeah, so Sacramento, it's a great area. There are some crime areas as well too. I'm from San Francisco, so I know the Bay. I know Sacramento very well as well too. So yeah, so get to know a lot of fixing and flipper investors. You can literally look for properties that have been like recently sold or have sold in the last 12 months or 2 years, and look for properties that have been like that look like they have like a lot of updates done to it. And sometimes it will be in the description. On Redfin, Zillow, Realtor, it's going to say fully updated or recently updated or recently renovated. That word renovated or updated or recently updated, those are keywords that's a fix and flip investor right there. And you want to reach to like the agent, maybe they, like I said, maybe the agent might be an investor themselves, and you're just trying to get like an understanding of have somebody like help you that you can like understand how to do like the fixing and flipping business. But again, understand like a lot of the language as well too. Start You have to start building like your list of pretty much everybody. So you kind of, yeah, which leads to step number three is working on relationships. You want to start building relationships with real estate agents, so that way you have real estate agents bring you properties. Wholesalers are the best one for fixing and flippers. Wholesalers are the ones that bring you discounted properties, and these kind of properties are going to be um, great deals. Occasionally, it depends on how good that wholesaler is as well too. But wholesalers and fix and flippers are like the best network as well too to each other. So you can learn from other wholesalers from their experiences as well too. And what's it called? Like I was mentioning, title companies, so that way you can work with an investor-friendly title company. Also work with contractors as well too. So you have to get to like understand a lot of the materials that you want to use, what's the most common used materials, because sometimes you can get overpriced in a lot of things. And then again, if you're networking with other investors locally in your area, especially through the meetup.com, I'm pretty sure that if I were to like help you find like a lot of meetup events for the, especially right now, March is going to be like a hot month for a lot of network events because it starts getting warmer, and a lot of these investors are networking as well too during these times, March and April and all the way through October. These are going to be the best times to network because these were the time where a lot of projects are going to start happening right now. So networking is definitely going to be the major of it. So you want to start building your list of like other investors, pretty much everybody. And then that's why I have like the CRM available as part of my calculators, is where you can keep a track of like all your people, keep a track of all your properties, keep a track of like all your people, the opportunities that you have available. Also, market research is there as well. Market search is there as well too. And so it's just getting into like all those steps into it. So it's an overload of steps. And that's the thing, is don't overwhelm yourself with all of them to do it. Close them as quickly as possible. Is use something as simple as a composition book, and you use that composition book to keep a track of everything. So have a game plan. Just like any business, the very before you even start like a business, you need to have like a game plan on how you want to do your business. Especially in real estate, you definitely want to have like a full game plan on that, and then start building that entire game plan. So um, start building that as well too. And also again, put yourself in that in as a business owner of like, all right, if I'm going to be a business owner for real estate, how much time am I going to be spending to like do this, so that way I can start making more deals and then make more profit and to attend more networks, and eventually you're living like a whole different lifestyle if that's like your ultimate goal. So that's part of the plan as well too. Where are you right now and where you're trying to get, and what are all the steps that are going to take for you to get there. And it's not going to be a straight path. It's going to be a mix of everything. But through all those mixes is what we call experience. So, but part of the way you can't learn experience if you're not also implementing some action. So get a game plan, take action on that game plan. Your first action is to get a game plan ready to go. So that way you can understand your mentality, where you are and where you're trying to get. And then from there, start learning like all the steps on everything. So that's going to be your game plan number two, and start networking, start asking questions, and slowly and steady, you're going to see it's going to be 2, 3 months, you're gonna be like, oh wow, it took some time, but that's part of progress. It doesn't happen overnight. It just takes either some time for you to learn it, for you to learn for sure it's gonna take some time, or to expedite it, it's gonna take some money to expedite it. So just start taking some action in any way possible. But my first one is I have a game plan, because if you don't have a game plan, then you're not really considering this as a business. It's just something that you're trying to do as a hobby and you're just going blindly. So you need to have a game plan, just like any other business whatsoever. Which, as a matter of fact, part of my one-on-ones is where I have like a literally a mind map of what structure of everything, of like all the steps from there. Like I said, I'll even show you right now. Um, this is the roadmap that I have for pretty much anybody. So that way you understand how it goes. It's literally right over here. Introduction to real estate wholesaling is expectations. Oh, not that one. Where's my other one? Oh, well, this is like the basic one, but there's more detailed one. Market research. How are you gonna get like your leads? Understand keywords. Building like the relationship, the sales reports as well too, the expectations. If you're working with sellers directly, if you're working with agents directly, um, and again, I don't know what the level of experience they have. Understand like a full market analysis as well too. Marketing strategies. If you're trying to do some marketing, or again, it's just like getting like a flow of deals as well too. And of course, the most important one is making sure that you're closing as well too. So this entire roadmap is basically what I walk through on more one-on-ones. If you want to get like a more understanding about that. But if you're looking for somebody more locally, it's simple as going through Redfin and Zillow, typing in like your market area, Sacramento, California, and literally I can find you right now probably some fix and flip deals, and then these are going to be properties that are going to, and you're able to tell by simply looking at this. Here's one right here. This is a fix and flip deal. It's a fix and flip deal just by the flooring, paint. It's just things that are really updated, and that's your person to reach out to. So that way you can ask more questions if they happen to be the agent happens to be the investor, because sometimes they are, or sometimes they're like, hey, I'll definitely want to network with like your because I'm trying to get into like the fix and flip business. If you're able to network with him, by any chance, Mr. or Miss Agent, just something as simple as that. I'm just vested in the course, not pairing with a in building risk. Yeah, there you go, man. So if you're already invested in the course, by all means, just learn it, take as many notes as possible, but don't just take notes, because I know for sure a lot of people get stuck on that education, but no action is getting taken. So learn something, take action. Learn something, take action. Learn something, take action. Or even sometimes just teach it to somebody else so that way it can get stuck with you as much as possible. But you gotta implement some type of action as well too. It hopefully that's able to answer like your question. Are there any chance any other questions that you have, or anybody else have any other questions? No? Okay. Um, well, if that's a wrap, if there's no questions, I'll keep an eye on the chat. If there's no other questions, thank you. Of course, my pleasure, man. My pleasure. Um, if there's no other questions, I really appreciate you guys for attending this event. The next event is on Wednesday at 6 p.m. Pacific Standard Time. If I see you guys, or if I don't see you, then hopefully I'm able to eventually we might be competition to each other as well too. So who knows? So like I said, if you're starting implementing some action, Jason, you're gonna be my comp. No, I'm totally kidding. I just like to be like that at all times, which is part of being team building on my side. But I really appreciate you guys for coming in again, and hopefully I see you guys on the next event. And again, the recording is gonna be available on my website, eltonvargas.com. Education stuff is there as well too. Previous recordings are there, so everything is there. Any other questions you have, reach out to me for any one-on-ones. All right, guys. I really appreciate you guys, and you guys have a blessed rest of the night, and I'll see you guys in the next one.